Welcome, everybody, back to Investing with Jimmy. Thank you so much for joining me. Today's episode is actually going to be about Google stock. As you can see, I have up Amazon because I want to show you an example of why I choose Google over Amazon, why I choose Google over Meta. Those three giant companies, in my personal opinion, I like Google's situation. I think that Google is one of the best companies that you can invest in for a future because they're so involved with AI. They've got the cloud. Now, don't get me wrong, Amazon is a beast. Amazon right now would not be the play, in my personal opinion, because of the fact that they've got a lot of things going on with the market right now on product. They've got a lot of tariffs, the concerns of the economy, of people buying. So, Amazon right now, if you look at Amazon, let's take a quick look at Amazon. Even though that this segment is about Google, I want to compare the three options for you. So, Amazon, on a 5 year, you're pretty much here up at the high level. If I click on a 1 year, okay, now on a 1 year, you're looking pretty good here on a 1 year of Amazon. Okay. Now, your highs of this stock were like 245. So you've got about, you've got a decent opportunity to get back to the highs. I just don't see it happening anytime soon. That's the problem. Do you really want to invest this kind of money on a stock right now that may not really do that well over the next couple months? May not be the right time. Now, if Amazon dips down to these lows over here of like 165, that's a different story. Then we might want to come in and get at least $20 for each share. That would be my goal, is to get about $20 profit per share with Amazon. But Amazon, excuse me, Amazon would not be my play. Now check this out. Check this out. If you come down here and you look at Amazon, okay, we're going to go ahead and check this out. I'm going to show you something. Okay, Amazon's profit margin is 9%, 9.29%. The return of assets is 7.44. Now, check this out. The total, let me see something real quick here. Bear with me. Yeah. All right. So here's what I always focus on. This is my most important thing I focus on when I'm looking at a balance sheet. The total cash that Amazon has is $101 billion, $101 billion. The total debt is increasing 54%. So half of their total cash, more than half, is now in debt. Okay, they have a total free cash flow of $44.64 billion. So 54% of the 101 is in debt. And that has been rising. And I've noticed that. Okay. All right. So we're going to go ahead now and look at Meta. We're going to type in Meta. And we're going to take a look at Meta. Okay. Now, Meta, if we look at the chart here, it should pop up here in a second. Here, let's click on a 5 year. Okay, here's a 5 year for Meta. And as you can see, we're way up at the top of the peak. Okay, as on a 1 year, if you check out the 1 year here, you're a little high, you're a little over average right now at today's price. You're a little over average. Okay, now let's take a look down here at the bottom and take a look at their balance sheet. And they're at 77.8 billion. and the total debt is 27.25%. The total free cash flow is 36.1 billion. So their debt is lower than Amazon's. Amazon's is 56% debt. Meta's is 27% debt. Okay? Now I want to show you something with Google. This is what I like about Google. Google. Let's take a look at Google. Today it's trading at $159. We'll call it $160. Okay? If you look at a 5-year, it's not going to be good. See, the 5-year is very high. It has had a lot of uprise over the last 5 years. If you look at the last year, of the 3 opportunities, Google is the best based on the last year. The last year, Google has went down. Okay? It has went down the last year. So you're right down here, right here where this line is right here. So if you look at that, you're exactly, you're a little lower than average. Okay, you're a little lower than the average. So I would probably say you're average. You're right perfectly where you want to be. Now, could you get it lower? Maybe. I mean, it did come down to the 153, and I think 147. No, 145 was the lowest that it hit. I believe that's over here. Let's see. Yeah, 145 was the lowest that it has been in the last year. Now, get ready for this. This is why I really like Google. Let me show you something. Google's balance sheet. Check this bad boy out. Total cash balance sheet is $95.66 billion. The total debt is 8.65%. The total free cash flow is $56 billion. They have the best balance sheet that you're going to see in the stock market. They are the strongest balance sheet I think I have ever seen. That is incredible. You're talking about a company that's basically debt free, like literally debt free. So if you compare these 3 giants between Meta, Amazon, and Google, I like Google. I like Google. All right, now who buys Google? Who buys Google? Well, I tell you how you treat Google, okay? The way you treat Google, everybody's different. Everybody's different based on their dollar amount. But most people who buy Google, they're buying Google long term. They're looking to buy it and hold it. Every time it dips down, they add more. They add more. They treat Google as a savings account. Because if you analyze the history of Google, and I'll share something else with you, it averages 26%. See, this is a 3-year return right here. 26% return. Now, if you look at the year to date so far for 2025, Google is down almost 16%. But so is the S&P 500. You look over here, look at the S&P 500 on a 5-year, went up 95%. Google on a 5-year return is 154%. 154% on a 5-year return. 3 years, 26. A 1 year is averaging 2.8%. So what people do is the wealthy people will buy big safe stocks that have a great balance sheet like this, and they treat it like a savings account that earns them money every year. So if it goes up 20% in 1 year, great. If it goes up 10%, great. If it goes up 2%, it still went up. They have not had one losing year in the last 5, not one. Okay, so I really personally like Google. Um, Google is a very, very strong company. Now, Google is involved, of course, with AI. They're one of the actual leaders of AI. They have supercomputers that they're working on. They have the Google, they've got their cloud service. Um, they're huge, they're doing really well. Now, I was kind of surprised that only 10% of their revenue comes from their cloud. So I was kind of surprised by that. I was shocked that 56% of their income comes from search and advertisement sales. I thought that the cloud would be stronger. I was surprised that it's only 10%, but I have a feeling that their Google Cloud is going to end up making more money in the long run. I think that that's probably going to end up being more like 25% of their revenue. So I really like Google here as a hold. Um, and I've been personally buying Google every time it dips. I just recently bought again when it was 100, and I think I got it for I think I paid 147 $147. So I just recently bought Google, and I'm holding Google. I don't really have any plans of selling Google. I just keep accumulating it. So right now, I'm tempted actually to purchase more. I don't feel that $159 is an absolute steal. I think it's a decent deal. If you look at the 5 year, it's pretty dang high. If you look at the 5 year, if you look at the average of this stock, like let's look at this chart for 5 years. If we had to pick a center for that, I would probably say it's about here, right about there. And if you look at that, you're talking $102 per share. And that's over a 5 year period of time. Because remember, Google's made 153% over 5 years. It's right there up at the top, right here. Look at that, 153% right here. That's why that the average over 5 years is 107, because it has increased. But Google is a well-run machine, and it has a lot going on. So you would kind of expect it to go up and up and up and up. Okay, if we look at the 1 year, you're only talking 2.31%. So it has really, really cooled down on what it's doing, and it's so far this year it's not performing very well. Now, if we look at the average here, we have $159 is right. This is exactly where it is. That's about the 1 year average. So I don't see Google going really any lower unless we have some kind of crazy recession or something like that. But remember Google's financial situation. What happens in recessions? Everybody, ask me or answer real quick in your mind. What happens during a recession? Cash is king. Cash is king. So you take a company like Google and you look at this right here. The debt is 8% and they have $56 billion to do whatever they want to do with it. Google's a very smart company. So there's a lot of smart things that they could do. They could take advantage of buying something that helps them. They don't have no issues going on with China. They're not really involved in China. China bans them from search. They don't get to have any searching, but they do sell advertisement outside of China to the Asian countries. So anyway, I like Google, guys. So if you see Google dip, if you see it dipping down to like the 155, 154, 152, 153, man, jump on that bad boy and just hold it. Okay, guys, thank you so much for watching. This is a new channel. This is my third video. So give me a like, subscribe to the channel, and I always try to do at least one stock every day or every other day. So thank you guys for all the support. I know a lot of you guys come from Gamble with Jimmy, and you guys are supporting this channel and really helping me launch it. Matter of fact, man, I was shocked. This is just my third video, and I already have 75 subscribers already. And man, I can't thank you guys enough for that. That was just awesome for all you loyal people that have coming over from Gamble with Jimmy. So thank you guys for boosting and helping me with the foundation of this new channel. You guys have a great day, and I'll see you on the next one.